Hey everyone, welcome back to Corporate Decoded, the place where we uncover the juicy secrets hidden within corporate filings. Today we're digging into Alexander and Baldwin Inc.'s latest report, and let's just say there is a big deal brewing that could change everything for this company. Stick around as we decode what this means for shareholders and the future of Alexander and Baldwin. And hey, if you love getting straight to the point insights from these complex documents, consider subscribing and joining our Discord community detailed in the description below. Alexander and Baldwin Inc. is making some serious moves and has filed a Form 8K, which basically means something important is happening, and they need to tell everyone right away. The big news dropped on the 8th of December 2025. This report is all about Alexander and Baldwin Inc., an established publicly traded company. Now, usually companies check boxes on these forms to indicate specific things. What is interesting here is that they check the box for soliciting material pursuant to Rule 14 and Negative 12 under the Exchange Act. This often means they are preparing to get shareholder approval for a major transaction, like a sale or a merger. Their main publicly traded security is their common stock. The main event detailed here is under Item 1.01, which is about entering into a significant agreement. And believe me, this agreement is massive. On the 8th of December 2025, Alexander and Baldwin Inc., the company we're talking about entered into a merger agreement. This agreement outlines a plan to merge the company. They'll be merging with a subsidiary called Tropic Merger Sub LLC. This is often the first step in a company being acquired. Who is parent? Well, it is a joint venture involving some pretty big players, MW Group, and investment funds from Blackstone, Real Estate, and Divcowist. These are serious real estate and investment heavyweights, so you know this deal is significant. Now here is the part that shareholders will care about. At the moment this merger officially happens, each share of Alexander and Baldwin Inc. common stock will be bought out for cash, and the price is $21.2 per S-share. This means a private entity is buying out all the public shareholders. There is a catch for dividends though. For the most part, Alexander and Baldwin Inc. can't pay out extra dividends before the deal closes, unless it is absolutely necessary for tax reasons. And if they do pay a special dividend, the price shareholders get paid will be reduced by that amount. This is to make sure the buyer isn't paying for something they aren't getting. They did approve a dividend for the fourth quarter of 2025 of $0.35 per S-share, which will be paid in January 2026. This means the $21.2 per S-share offer price will be adjusted downwards by that dividend amount when the deal actually closes. If this merger goes through its goodbye to the stock market, Alexander and Baldwin Inc. will be delisted from the New York Stock Exchange. It will no longer be a publicly traded company. For employees or executives who have stock options or other equity awards, this merger also means changes. Their awards will typically be converted into cash payments. These cash payments will generally vest and be paid out on the same schedule as the original stock awards. The details can get complicated, but for a lot of these awards, the performance goals will be considered met at the target level or higher. Like any big contract, the merger agreement has sections on representations, warranties, and covenants. Basically, this is the part where both sides promise certain things are true and agree to do certain things. Alexander and Baldwin Inc. agrees to run its business as usual in the normal course of operations until the deal closes. For this deal to actually happen, there are some conditions that must be met. The big ones include getting the approval from Alexander and Baldwin Inc., shareholders, and making sure there are no new laws or court orders stopping the merger. One important detail is that this deal does not depend on the buyers securing financing. This usually means they already have the money lined up. Alexander and Baldwin Inc. has also agreed not to look for better deals from other buyers. They can't actively seek out or talk to other companies about selling themselves. There are a few exceptions though. If another company makes a really good offer that the board believes is better than this current deal, they might be able to consider it. If the deal falls apart for certain reasons, Alexander and Baldwin Inc. might have to pay a breakup fee. This fee is $50.5 million, but there is a reduced fee of $25.25 million if they find a better offer from someone else by a certain date and then decide to go with that offer instead. On the flip side, if the buyers walk away under certain conditions, they might have to pay Alexander and Baldwin Inc. a reverse termination fee of a hefty $155.3 million. This protects the company if the buyers decide not to proceed for reasons within their control. To fund this massive deal, Blackstone Real Estate Partners, XLP, is providing $2.15 billion in equity financing. This commitment letter shows they are serious about providing the capital needed. Keep in mind everything we've discussed is just a summary. The full merger agreement is attached as an exhibit for those who want to dive into every single detail. Under item 7.01, they mentioned they provided supplemental information about the merger through social media posts and to employees, tenants, external stakeholders, investors, and analysts. They are actively communicating this big news, and item 8.01 covers other events. The big one here is that Alexander and Baldwin Inc. issued a press release on the 8th of December 2025 announcing the merger agreement and that January dividend. In the exhibit section, we see the merger agreement itself listed as Exhibit 2.1. There are also exhibits for social media posts, employee letters, FAQs, letters to tenants and investors. This shows a comprehensive communication strategy around the deal. Now let's put on our Warren Buffett hat and look at the bigger picture. Alexander and Baldwin Inc. is being bought out for $21.2 per S-share. This is a significant premium for shareholders, especially if the stock hasn't been trading at that level. The buyers are big players in real estate investment, which suggests they see value in Alexander and Baldwin Inc. Its assets, likely its land and property portfolio. They are betting on the underlying value of what Alexander and Baldwin Inc. owns rather than its current stock market performance. This move signals a potential shift from being a publicly traded company focused on quarterly earnings to a private entity managed for long-term asset appreciation. The main risk for shareholders is that the deal might not close, or that another better offer could emerge, and the company might have to pay a penalty. For the company itself, the challenge will be navigating the transition and ensuring the integration into the new ownership structure is smooth. The fact that the buyers are so confident to put down billions and not have a financing contingency is a strong signal of conviction. It is essentially saying they will buy it. The $155.3 million reverse termination fee, if the buyers back out, also provides a significant level of security for Alexander and Baldwin Inc., and its shareholders confirming the buyers' strong commitment. Alright, that is our breakdown of Alexander and Baldwin Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.